For calculating the cash flow from finances, let us look at the income statement. Were any dividends that were declared? So if you look at the income statement, dividends that got declared was to an extent of 17,000. So were they paid? If they were not paid, there would be a dividends payable account. So here we find that there's a dividends payable account, and the dividends payable has increased from 2,000 to 12,000. Now when we talk about cash flow from financing, dividends is a part for the equity holders, and likewise let's look at the other equities which are listed here. There is a retained earnings and then there's a common stock. Retained earnings actually flow from the income statement, and any change in this is kind of not looked at because this directly flows from the income statement. You don't want to consider this, but you may have to consider the changes in the common stock item. So here you can see there's a change. There was earlier 100,000 worth common stocks, now it is only 80,000. So something must have happened. Something like a buyback would have definitely happened in this case between 2006 and 2007. The other part of financing is related to the bonds. So what happens with the bonds? We probably are looking at a case where there was an issuance of bonds. So bonds have increased from 20,000 to 30,000. So let's kind of jot these scenarios down to calculate the cash flow from financing. So CFF, first related to dividends. So what we see was the dividends that has been declared is 17,000, and we also understand that this is a current liability, and current liability here in terms of dividends payable have increased to an extent of 10,000. So this is basically considered as a cash inflow. So 10,000 cash inflow and dividends that were paid was 17,000. So the net impact will be minus 7,000. So this is part 1. Now let's look at part 2, which is related to common stock. Here the common stock has been reduced from 100,000 to 80,000 because of buyback. So there's a net impact of minus 20,000 here. Impact number 3, which is related to the bonds. So bonds size has increased from 20,000 to 30,000. So here there is a positive cash impact of an extent of 10,000. So what is the total net impact? Minus 7,000, minus 20,000 and plus 10,000. So this comes out to be minus 17,000 as your cash flow from financing. So let us now look at what is the total impact on our cash flows. Cash flows would be CFO plus CFI plus CFF.